Today in the grain market, it was red across the board with soybeans falling very hard. That bullish USDA report just didn't have enough to give any support to the market. Even though at one point yesterday, the market was up about 30 cents before things started to decline. Export sales are at marketing year lows. We've been down $1 in the last 2 days. That's the biggest range since back in February from 4th and the 25th of February. The market was down $1.52 for soybeans. So we see a big turnaround here. It just certainly looks like that it just gives you a little bit of a volatility perspective right now, and we've got plenty of price action as we're going into the 4th of July holiday. Right now, the November option open interest really increased by 4,000 contracts, mostly in the 1520s up to 1660 strike, which was kind of interesting with the market falling so hard. The CVOL, though, is down 3 3/4 cents at 28.1%. The soybean oil is down 2 at 36.3, and the meal down 2.5 to 31.6. So that's kind of telling you that it just seems like people are just kind of liquidating somewhat here today and yesterday, certainly at the end of the month and end of the quarter. Now, corn was lower as well, and rain makes grain, so rain is called for over the holiday here. The forecast has just plenty of precipitation over this weekend. Now, the futures are back to the February prices. Market's down like a whopping $1.62 from May 16th high of $7.66 1/4. That's an awful lot for a future like corn. So the DEES option open interest had a lot of liquidation here of down 5,000 contracts, mostly in the $8 up to the $10 strike. So just everyone kind of getting out here before the holiday. Even down 3,000 puts from the $5 to the $7 strike. So it just seems like everyone wants to move away from being long any premium at this point. The CVOL is down 4% to 41.2. So everything is really, declining and shrinking at this time. And wheat is no stranger at all. That's been down. Inflation concerns are really weighing on futures right now. We're down 20 cents today, 90 cents for 2 days, and down $4.22 from May 17th from the 1285 high. If that gives you an idea, it just seems that the lowest acreage report that we've had yet, traders are still moving to the exits. It's kind of a surprise. The September option open interest increased 1,900 contracts, mostly in the $10 strike, and 5,300 puts they added to. It was just unbelievable too. To the $8 puts, they had mostly like 3,300. The CVOL was down 3 1/4% to 45.8. So everything is just really contracting a lot. So we're finished with the second quarter. It's the end of the month, start of a long holiday weekend. Everyone's on vacation. I think it's a perfect time for a reset. So let's see what happens come next Tuesday.